I do have to say that this is kind of good and bad because increasing their membership from 119 to 139 and their monthly one for $2, it is obviously going to help them see a nice growth in their revenue in the coming quarters, and starting in quarter 2 2022, because we're going to see that people will continue paying it. The thing is that if they increase it too much, people may notice that, hey, they're increasing this, I need to pay $2 more monthly for something that I'm not really using. It's not the case for me because I don't pay for Amazon Prime, but maybe you pay it, but you don't use it that much anymore because we are not in a pandemic anymore, or you don't buy that much things anymore. Maybe it's not good for you or not worth it for you to pay $15 monthly for something that you don't really use. So it could be good if the subscribers stay if the subscriber numbers stay stable, or at least grow in the coming quarters, as it will grow as well in the revenue. Ahora, holy guacamole, Amazon stock is up 14% after they reported earnings, but the truth is that I don't know if it was an overreaction or not. Hello everyone, welcome back to the channel. Today we're going to talk about Amazon, their earnings, why the stock went up that much, how my position is doing, and more. If you're new to my channel, welcome. Please consider subscribing and smashing that like button, since it really helps the channel out. Now, first of all, we can see here that the stock was already down 7.81%. Today, after Facebook reported earnings, the stock dropped massively. As we can see here, it dropped 6% and it was down 7.81% since then. So the stock being up 14.26% is actually being up about 5% before the fear drop that they had yesterday, because it was at $3,012 on Wednesday, right before Facebook reported earnings, and after they reported earnings, Facebook dropped massively, 20-something%, and people got a little bit concerned, thinking that maybe Amazon was going to have bad earnings as well, and it dropped a lot. So basically this 14% was a recovery from that drop, and it's actually up only 5% since Wednesday, which still is a good return. But let's see how they did. First of all, earnings per share, they reported $5.80 per share versus $3.57 per share expected. And revenue, they missed revenue at $137.4 billion in comparison to $137.6 billion, but they grew 9.4% as we see here. And AWS grew 40-something%, which is actually very, very good, as we saw that Microsoft and Google Cloud business also grew above 40%, and their AWS beat analyst expectations by a little bit of $17.8 billion versus $17.37 billion expected. Even with the weaker than expected sales number and disappointing guidance, Amazon gave investors enough confidence that growth will recover. The market had a very different reaction to Facebook results on Wednesday, sending the social media company stock and many other social media stocks to its worst ever drop after its earnings and forecast missed estimates. As we already know what happened with Facebook, I posted a video about that. Now, Amazon disclosed from its fast-growing advertising business. For the first time, advertising service grew 32% year-over-year to $9.7 billion during the quarter. Previously, Amazon included advertising revenue in its other business segments, which obviously it's nice to see that it is having a nice growth. It had been the majority of their revenue, where they are happy with their ad growth. It continues to drive value. I do have to say that Amazon's big profit gain on Rivian is the result of the electric vehicles maker's IPO in November. Earnings per share included a Rivian gain was 27.75 for the quarter. I'm going to check that on their report. They did mention that, as expected over the holidays, they saw higher costs driven by labor supply shortages and inflationary pressures, and these issues persisted into the first quarter due to Omicron. Despite these short-term challenges, we continue to feel optimistic and excited about the business as we emerge from the pandemic, because what really happened, you guys remember that Amazon had a huge growth in 2020 because of the pandemic, and obviously they were not able to continue with that growth, as that growth was not sustainable without the pandemic. As in 2021, even though we still had a pandemic, people were already going to the office, we're not in lockdowns anymore, and obviously they did not see the same growth as in 2020. Now, Amazon operating cash flow decreased 30%, and free cash flow decreased to an outflow of $9.1 billion for the trailing 12 months. Net sales grew 9%, as we already saw. Operating income decreased $3.5 billion because of the expenses and the cost increase that they just mentioned, plus inflation, supply chain issues, and all that. And net income increased to $14.3 billion. But I do have to say that they mention here that the fourth quarter 2021 net income includes a pre-tax valuation gain of $11.8 billion included in non-operating income from our common stock investment in Rivian Automotive. Basically, what they are saying here is that in quarter 4 2021, they had basically an unrealized gain from the stock that they have of their investment in Rivian. And we already know that Rivian stock, you can go and check it out, is down about 40% in year to date. So they are basically announcing this as a huge gain in quarter 4 of 2021, but already in quarter 1 2022, the stock is down massively. So those gains of $11.8 billion are not at $11.8 billion anymore. So that is actually going to be really affecting their financials in the next quarter. We can see that they certainly had a nice growth from $125 billion to $137 billion in a quarterly basis, but on a yearly basis from $386 billion to $469 billion. And obviously that is a nice growth year over year, but we can see that their operating income actually slashed in half, actually decreased a lot from $6.8 billion to $3.4 billion in the past quarter. And year over year it increased, but only a little bit, of $2 billion from 22.8 to 24.8 billion dollars. And obviously that is not something that people like to see in companies. As I said, with Facebook, we always like to see their net income growing at the same pace or faster than their revenue. And obviously when we check their net income here, we can see that it almost or more than doubled in comparison to last year, from $7.7 billion to $14.9 billion. But we do have to take into consideration that $11.8 billion of this $14.9 billion are from the Rivian investment. So yes, they obviously saw a nice increase in net income, and this is obviously good news, but we gotta understand that without that, they would not be making that much money. We can see that their net sales in North America increased a little bit from $75 billion to $82 billion, and internationally it decreased from $37.4 billion to $37.2 billion. But their operating expenses increased a lot, from $37 billion to almost $39 billion, which is why they had an operating income or loss in this case of $1.6 billion. But then under AWS, we saw that it grew 40% from $12.7 billion to $17.7 billion. And obviously their operating expenses were not that much in comparison to their sales, and their operating income was actually pretty nice, growth to $5.2 billion. Now, for the first quarter of 2022, they expect a net sales to be expected between $112 to $117 billion, which is a growth of about 3 to 8% compared to the first quarter of 2021. And operating income is expected to be between $3 billion and $6 billion compared to $8.9 billion in the first quarter of last year. And this guidance assume, among other things, that no additional business acquisition, restructuring, or legal settlements are included. Now, obviously, we know that they have been affected by COVID, supply chain issues, and all that. But we can see here that analysts were actually expecting about a growth of 15% for this first quarter. And even mentioned that Amazon also hiked the price of its Prime membership for the first time in 4 years. The company said it will raise the price of its annual Prime membership to $139 from $117 per membership, which is about 17% growth. The cost of the monthly Prime membership will also increase to $14.99 from $12.99. The price change will go into effect for the new members on February 18th and for current members after March 25th. So to be honest, I'm happy with Amazon going up that much because I'm an Amazon investor. I added during the drop, as you guys know, that I wanted to see Amazon below $3,000 in order to add to this position. So obviously I'm really happy, but I do have to say that they missed analyst expectations on their forecast, on their revenue. They had a nice growth on their AWS. They had nice earnings because of their investment in Rivian, but I do believe that this uptrend in the stock was mainly because of because it was recovering from yesterday's fear in the market. Now, my position right now is still up by a lot. As you guys know, that I have a very nice average cost. I started investing about 2019 in this stock, and I have an average cost of $1,700 per share. I remember I got it at $1,500, so I've been adding a little bit, not that much as when I started, because I have a very nice average cost, but still I added when it dropped below $3,000. Now, it already represents 24.46% of my portfolio, which is another reason of why I don't invest that much anymore in this stock, even though I love the company, I love their diversification, their growth, and I believe it has a lot of potential long term, but I'm already up 85% in my position, and it already represents a lot of my portfolio. So I will add, as I said, below 3,200 and below 3,000 even more. So at the moment, I'm happy with their earnings. I'm happy with the stock going up that much. I do believe that they need to improve a little bit in the coming quarters, as we already know that 9% is not such a nice growth from a FANG company, as we saw that Google grew 32%, Apple it was about 20% or 19% if I'm not mistaken, and so on. Overall, I'm happy with their earnings. Were okay. They were not incredibly amazing in my opinion. They were more than okay. I believe that this is an excellent company in the long term. I believe that it is at a nice price above below $3,200 per share, which is where I've been adding to this stock, not that much as in comparison to when I started investing, but I do believe that it was a nice report in my opinion. I'll leave you here the video of the 5 stocks that I'm looking to buy this month, and here a button for you to subscribe. Thank you and see you next time.